Good morning. Welcome to Thursday, the 10th of September. I am Boston Omofayo with Frontier Opening Bell. Welcome my analysts on today's show. Ali Kansacho, the CEO and founder of Rich Frontiers Management. Good morning, Ali. Hope you're keeping safe today.
Pleasure to be with you, Boston, as always.
Thank you. As always, also good to have Ayodeji Eboro, who is a chartered trader and a managing director at Afrinvest Securities, a licensed investment securities trading firm on the Nigerian market. Ayo, it's good to have you on the show as well.
Thanks for having me.
Thank you so much. Let's kick the show up by starting with the equities market. A bit of a negative day across some of the frontiers exchanges for securities, Nigeria, the BRVM, the Kenyan bourse. South Africa kicked in a positive trading day for Thursday, despite the decline in GDP for the second quarter. But again, it's pretty nice when you look at how the equities market are reacting to various issues within the various jurisdictions. The Egyptian market down, the Kenyan market, South Africa roaring 1.42%. We'll hear a little bit more about this when we move on into the East African markets. The big story today is that the IMF and the Parliament Budget Office is reviewing Kenya's GDP up for 1 to 2% positive reading for this year because of the outlook on exports of horticulture as well as reopening of tourism. World Bank has given Kenya $750 million for development projects in the arid northeastern part of the country. This is a huge development if it comes to help balance socio-economic life and activities in that part of East African country. Telkom is unveiling a 3,100 shilling smartphone. I'm not sure when Ali will be able to lay hands on one of the smartphones and show us what it looks like. Mozambique Central Bank is expecting inflation to stay below 5% over the next few years. The South African authorities are helping Mozambique to deal with insurgents. They say they are ready to help, and so that the LNG project in Mozambique can get up and running. Meantime, the wet weather season in Malawi has hit the country's tobacco industry. FX earnings down because sales or auctions were also down in the period under review. And Tanzania export of goods, $9.8 million in July. Ali, would you just want the smartphone quickly? But I think the big story is around the Kenya's World Bank funding development support. Stories this morning that Kenya is also looking for additional budget support from the World Bank or the IMF.
So let me start with the story you first referenced. This is the $31 smartphone that they're proposing to bring to the market. Telkom has been trying to go after this mass market for quite a while, and I think it's a huge opportunity. What we know is that notwithstanding smartphone uptake, there's still a huge untapped market. I think 60% of people still have the old feature type phones. So if you can transition those people into smartphones, you've got a great customer base, and that's whom I think they're targeting. You started by talking about Kenya GDP, IMF, Parliament, Renaissance Capital are all projecting positive 1% from previously -1 to -2%. So that's a good signal as well. That's on the basis of outperformance in the agricultural sector, as you mentioned. I think that's a story. Yesterday we saw South Africa, the only positive.
So I guess we lost Ali there very briefly. Speaking to the East African markets, again, the World Bank is ready to support Kenya moving forward. There's been very rapid support for Kenya by the World Bank since the pandemic started, even with the $2 billion support for the country's SMEs industry. Let's take a quick look at the Nigerian and West African markets. The all the news around the Nigeria's president yesterday unveiling a new set of committees to get the country's a new agenda 2050 up and running. This is the latest in the country's attempt to put up a national development plan to get the economy up and running. Meantime, the central bank clarifies NASG's position, says no immunity for the central bank governor. There are still a whole lot of the face-off between these two strategic institutions within the Nigeria's public sector and the private sector. Zenith Bank says it sees its 4% pre-tax profit jump in 2020. And within the broader ECOWAS region, the currency ECO is now being placed back in the closet. No new date has been set by the ECOWAS body for the floating of this regional common currency. And surprising, positive inflation reading from Ghana, slowing to 10.5% in August from 11.4% in the previous month, due largely to a lower food index. Ayode Jebo, coming here, good morning. Let's start from the top. You want to put in a bit of the context into the Agenda 2050, which was announced yesterday by Mr. President?
Okay, thanks. To me, I'm not really excited at this, though it's necessary we have that long-term plan, because if you look at most of the plans that government have been coming up, have just been within to serve their period or their tenure. So having a national development plan, I think it's critical such that any new government would also key into it. But the fear is, we know there's always this policy inconsistency. So a new government may also come in, despite it's a long-term agenda, 30-year agenda. A new government may also come in and come up with its own version of the agenda for its own tenure. So we've not been able to achieve that form of stability or continuity, if I'll put it that way, in Nigeria, which always sets us back. But beyond that, it's setting up policy formation. Yes, it's a good thing, but we also know beyond policy formation, that next phase, which is policy implementation, we need to do a lot regarding that. There are a lot of policies that have been formed, and a lot of committees that have been formed, but when it comes to implementation, we do poorly within that space. So we need to see how we want to make that big shift from formation to implementation. That is when we can begin to enjoy the benefit of all these policies. We still have the economic sustainability plan, a 2.3 trillion naira plan, which looks very robust. That even my estimation was that even if we're able to achieve 50% implementation of that policy, we should see that impact based on the local content idea that is embedded in that policy. But we've not really seen anything. The year is almost going to an end. We have like 3 more months, and we've not really seen any major implementation within that space. So it's good that we have that national development plan, and the focus, my expectation would be that we need to focus on how we want to, on the infrastructure, power, and agri. How do we want to, I think maybe I will also add trade. How do we want to attract private investments? We don't have the capacity. It's good government has realized they don't have that revenue. So how do we attract foreign direct investment? How do we want to make this Nigeria a major investment hub in Africa, such that because we already have the market, how do they just need proximity to market. We talk about that in elementary economics, proximity to market. But now we really don't have that proximity, which adds to the cost of production. And for Nigerians, it means we need to spend more to acquire those products and services. So I think, in summary, it's a good idea, but the excitement is, I'm a bit cautious about the excitement because of our past habit of implementation.
Cautious optimism, that's what you're referring to there. That's the
Yeah.
phrase. Cautiously optimistic about this, again, these economic agenda now seem to be overlapping each other. If you look at Vision 2020, then the ERGP of 2016, both of them expiring this year, and within this same year, we set up another economic sustainability plan. Then within this year, we're setting up another committee again for another 2050. So it looks like these policies are beginning to overlap. And like you rightly put it, implementation becomes a very key issue here when you begin to look at where's the scorecard for this one, for the next one, and the next one. Of course, the policies within this, each of these framework requires time and funding to see them to fruition before you put on another one in place. So I think this is something that requires a whole lot of critical thinking. Let's just squeeze in quickly the Southern African market. I'm sure the GDP numbers is still what folks are wrapping their heads around. Then we got the business confidence index that jumps to 24 points in Q3 because the level 2 lockdown easing was announced the past few weeks. So optimism is that South Africa will be able to come out of that 51.0% GDP slump in some form in second quarter and perhaps exit it sometime into 2021. But the business confidence index is out. Some analysts are saying it's good, but we have to be cautious about the optimism that it provides. Satrix is a financial services company and is listing additional 100,000 securities at about 42 Rand per unit on the GSE. That's one big addition to what Satrix did about a month ago with the listing of that ETF on the GSE. Moody's cut Angola's sovereign rating downgrades to CAA1 from B3, but kept the outlook as stable. Today, Zimbabwe is opening the airports locally from today for resumption of flights, but international flights will resume from the 1st of October. Meantime, Air Namibia is struggling. The airline itself needs about $470 million to remain afloat, so it's cutting some staff wages by about 50%. Ayo, when you look at the South African story, what's your take on this economy? Do you see any similarities with what we're struggling with in Nigeria here?
I think there's a bit of similarity. South Africa too were still trying to stabilize when the COVID-19 pandemic also came up. So that had like a double impact on their economy. So you would recall they had issues, even they had to change their Minister for Finance. They were really in a major crisis. But we believe that if we're comparing both countries, they still have a sort of more control or sort of stability, and their structure and processes still looks more intact. You would still see that even for foreign investors will still be a bit more comfortable with the South African economy when comparing that to Nigeria. So in terms of policy formation, policy implementation that we spoke about earlier, they are far ahead. And it's because of that transmission mechanism. So when there's a major shock, you see that impact because of how the economy is very packed. Compared to Nigeria, that lag is before you see that transmission, whether it's positive whether it's positive or negative, it takes a lot of time before you see that transmission. If there's any major injection in the economy, because that structure, that link is not that strong, we don't tend to see that transmission. You know, like the South African economy, for those that don't even have job, there are some certain stipend that they also pay a certain period of time that helps drive that economy. They are old. They are also old people. They also pay them a certain amount of money. I think between maybe second week and last week in every month. So that prompts demand. We don't have all those kind of incentive or all those kind of structure in Nigeria. So everyone for himself here. You have to struggle and help support yourself. And that is part of what I feel in my own view. Also, when you talk about corruption, when you see countries that they take care of their retirees, they know that their future is secured. But here, it reverses the case. So people want to sort out their retirement now. They don't want to wait because there's really no when they can see their future. So I think by and large, they are two separate countries. In terms of size, we are trying to compete. But in terms of quality of life, I don't think we can compare both countries.
I tend to agree with you. There are a whole lot of different fault lines for South Africa and Nigeria. Welcome, Uche Naminis. Thank you so much, Ayodeji. Uche Naminis, a forex trader and managing partner at Blue FX Nigeria. Uche, it's good to see you.
Thank you, boss. Apologies for the late intro.
Thanks for coming. The global market is waiting for the ECB decision day today, if there will be any policy tweaking by Christine Lagarde and the rest of our team. But this meeting is very crucial because it comes just as the EU and the UK are still wrangling over details of Brexit, whether there will be a no deal or a deal by October. Meantime, oil prices are looking a little bit wavy. We went as close to 50, but here we are still trying to hold on to $40 a barrel for Nigeria's benchmark. Weigh in on this, Uche.
Right. The ECB meeting, is, as you've rightly mentioned, will be quite important. We'll get a hint of what the Apex Bank for the Eurozone is looking to achieve, really, in terms of their monetary policy. But I don't expect so much, really. I still expect some sort of consolidation, nothing aggressive, the same way we had with the Federal Reserve in their last FOMC meeting. That's the same expectation we see with the ECB. The Europe and UK decision are sort of, it's almost quite clear now that what we'll be looking at is a no-deal Brexit. So there is it's almost there around that 70-75%, because those two parties are not having anything consensual to agree on at the moment. So that's that. We still have that pressure. I think I've mentioned to you several times that there is no bolstering effect now when it comes to oil prices. So that's why we were trading at that ceiling level for Brent and WTI at that level for 53, 43, 45, 46, respectively. There is no other bolstering, should I say, variable that can make oil prices trade higher at the moment. So it's either OPEC decides to cut again, which they realize that the feasibility of that is slim, really. So and they understand that you're still going to have people like Nigeria being significant laggards, because we've gotten to a level whereby we can't even go lower than what we currently are, really, when it comes to production costs. So OPEC understands that, and that is why they can aggressively tell their member countries, continue cutting. So the dependence is highly on the recovery of the demand, really, economic and business activities of the different countries. And that's basically what we are looking at. We can see the market right now sort of tilting towards some sort of cautious, pessimistic overview, because really there is no there is no optimistic outlook. There's a lot of bet that has gone to vaccine production, and right now one of the leaders put out the result that they had to put it on hold, that the adverse effects in one of their participants in UK is extreme, you know. So all these things are saying, or investors are saying, well, we've front-run all this positive news, and now it's looking like it is not what it is, you know. And that's why we're seeing equity prices, we're seeing some high-yielding assets trade lower in the fund.
I agree with you. Look at Singapore. The stock market came down sharply today because there's a bit of they are bringing back some form of partial lockdown when they thought that everything was okay and everybody went out. Now they are considering looking and that just spooked the stock market today in Singapore. So, like you rightly put it, even the whole optimism in the U.S. that the vaccine will be available by October, at least distributed to voters before November 3rd election. Then all the hopes about whether it's Pfizer or others or GSK in the UK that we will have it by now. So from turning this positive news, like you cautioned weeks ago, is beginning to come back and bite the markets right now, and it's not looking good. It's not looking good at all. A quick one for the North African market. We'll have a chat to about a minute or two more across a few stories within the Nigerian markets. Ayodeji will take us through the Thursday's trading day, and then Uchenna, you take us through the FX market. Egypt is setting up a $5.78 million commodity exchange to trade initially wheat, rice, sugar, and oils. The idea is to make sure that small farmers, according to Reuters report, small farmers in Egypt have a market for their produce so that they can take maximum benefit of their output, especially wheat, in which Egypt is one of the largest importer of that agro product. Misa Hotels in Egypt reported 85.4 million Egyptian pounds net profit. That's good, considering how Egypt has been able to handle the COVID-19 and keep hotels and some of this tourism activities up and running. We're expecting tomorrow, according to Reuters report, crude oil loading from one of the ports in Libya. And Tunisia, the airline is holding an EGM at the end of the month. A few other stories around corporate news from Morocco, Atakwa floating 2.7 billion dirhams bond issue and all of that. Let's get back to Ayodeji quickly. What's the trading day looking like for Nigeria today? What's your take on our markets?
Yes, I think we've been seeing some major sell-off in the top banks and like GT Zenith by some of the foreign folks this week, and we feel that that would also present new opportunities for new investors to also come in, because we can see that despite the COVID-19 pandemic, it's showing less impact on their businesses. You saw the Zenith Bank's forecast of projecting a growth at year end. So that would also strengthen investors' sentiment, and we believe that the decline may moderate from today. We may see a rebound today in the market, and also for the fixed income, we saw the PMA auction results yesterday. So across all the tenors, the yield declined. The long term went down to about 3.1%, and a lot of investors also lost their bid. So that's those orders will find their way into the secondary markets today. So that is also expected to pressure rates rather today in the market. So by and large, we feel that the fixed income market will be bullish, and we expect to begin to see a positive upturn in the equities market.
Thank you, Ayodeji. 1.1% on the 91-day paper yesterday. That looks as the lowest we've seen ever. And we're thinking whether we could just cross to a negative point. Is that still likely before year end?
No, it's unlikely that we'll get to that negative region. At least for a savings account, putting funds in your savings account is at 1.25%. So you may prefer to still leave your money in your savings account than go for Yes. So for most of the PFAs and fund managers, we may see most of them doing more of placement. So that's still maybe around 3 to 4%. And at least for the banks, they are able to have that fund, though there are limited lending options, but believe that they may still want to keep that cash and look for avenues to make use of them trading.
Okay, let's see how it goes, but it looks like a very interesting time we're in. Uchenna, wrap it up for us on the side of FX. There's still a whole lot of stories out there about the FX liquidity in Nigeria. Where's the situation of things now, as well as exchange rates?
I know the bank the central bank tried to mitigate the risk in terms of closing the gap between parallel market and spot CBN spot rate, but it's looking like those things are just they were too temporal and too unsustainable, because I'm having discussions with stakeholders in this market, BDCs, and some people that actually do have access to this FX, and they are telling me it's not what is being announced really. All the things that have been said to us in terms of supply of USD, we're not getting even quarter of that. So the reality on ground is that rates would continue to soar higher. There's no sustainability to that front. And those people in possession of FX are saying, well, since there is no infrastructure or monetary structure to combat this, I'd rather not just jump into selling off my FX, So most participants are still holding on to the FX because there is a high likelihood that there is that projection that price will continue to trade higher towards that 500, not of 500 region. So yes, that's the pressure. The liquidity pressure is still immense. It's still intense. I know that the central bank is trying their best possible, but you can see the combination of the slowdown in global economic recovery, oil prices now looking to trade lower. That is even another pressure on our receipts, and the structure that has been put in place as regards to the regulating PMS from the NMPC is those things are not exactly, they don't provide that immediate effect in terms of pressure release on the liquidity control we get in terms of the FX space. So I know they are trying their best. There's 1.5 billion that the World Bank is still holding on and saying until we have our rates all sorted out before they can come true. But the reality is that there is no viable plan. Let me put it that way. Just not a lack of words. There's no viable plan.
There's so much. The obvious inability of the country to generate FX on a sustainable and steady basis is the background to the entire conundrum where we found ourselves. Not necessarily much of the central bank, I think. I think it's more of you can't spend what you don't have. You can't give what you don't have. So if the economy is not generating FX inflows, how do we get it in? Our main revenue source for FX is oil, and we know where we are on that. Exports is anything to write home about. So, and our FDI is also been trending down to almost zero on a quarter-on-quarter basis. Quite a very tough time, but let's see how it all goes as we move on. Ayodeji Ebo at Afrinvest Securities, thank you so much for your time this morning. We appreciate it. It's a business time for everyone. Thank you so much. Uchenna Minis from Blue FX Nigeria, the managing partner. Thank you so much, both of you, and to Ali Kansachi, who was with us a bit earlier on the show as well. Thank you so much. Enjoy your Thursday. We'll see you again tomorrow. Bye for now.